not just in Greece, of course, where it's been quite dramatic, but across the whole region in the post-crisis period. So that's the first challenge. The second is how to overcome what we call the middle income trap. So the trap that some countries fall into when they're growing strongly, developing, and then they reach a kind of buffer. And the third challenge is about green growth. How do we make growth greener? Because as I'll show you in a minute, very often growth comes with very difficult environmental challenges. So just to illustrate each of these, firstly, looking at the whole EBRD region. Now, what we do in chapter 1 of the report is, I think, quite an interesting innovation. Rather than just comparing our region with different countries, we construct what we call synthetic comparators. So you take a group of countries that are similar to the ones we're interested in, and you construct a weighted average of their growth rates. So it gives you a sense of how our region is doing relative to others. And the basic lesson is the green bars on the left show that between 1999 and 2008, the EBRD region was actually doing pretty well compared to relevant comparators. From 2009 onwards, it's red bars below the line, which indicates we're doing badly. Now, that's the whole EBRD region. When I show Greece, of course, no surprise to anyone, the comparison is very stark. We had some good growth rates in the early to mid-2000s, and from 2007, 2008 onwards, it's been deep recession, Greece doing much worse than others. The dotted lines at the end are our forecasts. So we had a forecast for 2017 of 2%. It's probably a bit overestimated. We'll wait and see final figures. It's probably closer to 1.5. Our current forecast for growth in Greece in 2018 is 2.2%, which is maybe a little conservative relative to some others. We'll be looking again at these forecasts next month and possibly revising them. Okay, so now this middle income story. So let me just explain what this chart is showing. It's showing on the y-axis, the change in the ratio of a country's TFP, so total factor productivity, to US TFP over the period 1989 to 2014. 1989 being the start of what we see as transition, the fall of communism, and so on. And we measured that for a whole range of countries globally versus GDP per capita as a percentage of US GDP per capita adjusted for purchasing power parity. So the basic point is that as countries grow, as countries become richer, productivity growth tends to slow down. So you get this falling curve with some successful countries off to the right showing faster productivity growth again. So this is, in a nutshell, the middle income trap. How do you stop getting stuck there in the middle? And you can see Greece there at the sort of bottom of that curve. And how do you invigorate growth again? So the only way to do that really when you're at that point is to look at things like innovation and education and building a proper infrastructure and so on. This is where the difficult long-term challenges come in, and the report has a good discussion on that, I think. And then the third one, the green problems, the environmental problems. So this is what we call the environmental Kuznets curve, the fact that as countries become richer, then up to a certain point, they tend to be more polluting, more carbon emissions, more environmental problems. When you get at the far end of the right-hand scale, the very rich countries, then they often figure out a way to deal with these green problems. But this, again, is the challenge, how to move from this middle point where you're polluting and causing problems to develop, greener sectors and move beyond this environmental problem. So I've covered, there are 4 chapters in the report, and that's basically what they're about. And I do emphasize that the analysis is very rich, and I would encourage you to, as I say, take copies or go in line and look at it. Now, there's something else we do in the report this year, which is to unveil for the first time what we call our new transition concept. So if you're familiar with the EBRD, you know that we've been in the business of trying to measure transition more or less since we were founded back in 1991. And as economists, of course, we like measurements, we like data, we like to put numbers to things. We've had a big rethink of what we mean by transition, and what we are now emphasizing in all of our work, both our analytical work, but also in our project work and our policy work, it's all based around the qualities you need to have a sustainable market economy. And we think that you can condense those into 6 qualities. So if you want to think what would a really well-functioning sustainable market economy look like, well, it would be competitive, well-governed, green, inclusive, resilient, and integrated. So this is what we're, in all our work, this is what we're emphasizing now for all the countries where we operate, including, of course, here in Greece. What we've done is to try to measure where each country stands on each of these qualities. It's a big exercise that I don't have any time to explain now, but again, it's well described in the report with more details online for those of you interested. And the scale is on 1 to 10, so each country gets a score, 1 being the worst and 10 being the theoretical maximum. Each country gets a score for each of these 6 qualities. You're all dying to know how does Greece do? Well, this is what Greece looks like. So the dark line is the EBRD average. That's the one in the middle. Greece is the dotted green line, and actually does better than the EBRD average, and indeed we would expect that. I mean, Greece is an advanced country, EU member, with the exception of governance. So our analysis identifies governance as really the weak link in Greece. And by governance, we have a broad concept of governance. It covers public administration, judiciary, and so on, but also covers corporate governance as well, which we track closely. So this is how Greece stands, and you can see quite a big gap between Greece and advanced comparators. So we have a few countries like the US, Sweden, 1 or 2 others, where we also measure these things, and of course they perform much more strongly than our region generally, but also than Greece. So that's the report in a nutshell. What can the EBRD do to help Greece and to alleviate some of these problems? For that, I'm going to pass to Charlotte to take the floor.